You're asking banks to refrain from issuing dividends. You're going to judge them on a case-by-case basis whether they should go ahead when they come and request, yes?
Well, it has been an important day, yes, an important decision, but it is an opening to payments of dividends, actually. So we are enabling banks to pay within a certain threshold, so within a so-called guardrail, and this is a change with respect to where we have been up to today. So it's an important opening, which has been broadly supported in the Supervisory Board, and which recognize that we are moving slowly back to normal, although we are not in the normality yet.
So broadly supported, which does suggest not everyone supported it.
No, but there was a very broad support,
Okay. So the conditions that you're putting in place, that the limited dividend payouts you will allow on a case-by-case basis, are a bit stricter than those we're seeing recently announced in the UK. They're stricter than we're seeing in the US. Is that going to be a problem for the banking sector in terms of competing for investment, competing for staff and so on?
I don't think so. I mean, the important signal is the opening to dividend payments, and we also gave forward guidance that basically we intend to repeal this recommendation in September when, let's say, when it will come to an end. So we are going back to the ordinary situation in which supervisors will vet the dividend payments decisions by banks in the normal supervisory process on a bank-specific basis.
You could also argue that bank shareholders shouldn't really be getting anything yet as long as the banks themselves are getting the benefits of regulatory relief, the benefits of the TLTROs from the ECB. There is that argument out there. I mean, why have you decided to go ahead and let bank shareholders get something?
Well, there has been an intense discussion in the last months, actually, in my board. On the one hand, we recognize that there has been a reduction in the uncertainty. So now the macroeconomic path is clearer. Our economies has been more resilient, and it seems that by 2022 we would be back to pre-crisis level. That's positive news, and that is what is pushing us to reopen to dividend payments. On the other hand, we still have not a lot of visibility on the asset quality trajectory going forward, on credit risk. And also, as you correctly said, there is a lot of support coming from the central bank, the supervisors, and fiscal policies, which is supporting also bank profits. And this is behind the recommendation to remain prudent in distribution for some time.
What about bonuses? What's your stance there?
Well, we are also prolonging our general recommendation to remain extremely moderate in the payment of bonuses. And also here, however, we are giving forward guidance that by September we plan to go back to the old normal.
The banks would say, look, they need to pay their staff. They've had a good year in trading for various reasons. And if they can't pay the bonuses, they risk losing their best staff to non-euro area banks. Does that concern you?
Look, we have never asked banks not to pay their bonuses. We have said to banks, be moderate in paying your bonus, consider paying bonus more in instruments, to have maybe more, let's say, postponement of these payments, and so be moderate given the conditions we are working in.
What are you going to be saying to banks when they come to you and say, we want to pay dividends and we want the amount to be such and such? What is your threshold? What is your test?
Well, again, we set these broad, let's say, criteria, and we expect the banks to operate within these boundaries. If the banks operate within these boundaries, the overall ballpark of payments that we expect to be made is in the region between 10, 12 billion, which is approximately 1/3 of a normal year. So we would say that probably this would be reasonable. So we don't expect to have to intervene too much. We have seen already the plans of the banks for distributing. Most of the banks are already deciding to be moderate, so we don't expect to have a great need to vet on a bank-by-bank basis. But of course, we expect banks to engage with us before taking the decision.
Well, precisely, because you're recommending that this is the process that banks undergo. You're saying that banks need to be reasonable. What if banks, any particular bank, wants to be, in your view, unreasonable and make a higher dividend payment? What can you do?
Well, look, I mean, we have been very, very positive of the reaction that the banking sector in Europe had to our first recommendation and to the renewal of that recommendation in July. So banks have followed our guidance quite closely. We expect them to do so also in the near future.
The banking sector as a whole is going to come out of this crisis like the rest of the economy. But you've called many times for the banking sector to restructure, to reduce its cost base, to merge. Is this a message to them now saying, look, okay, we helped you through this. Get your act together once this crisis is over? Because we've heard warnings of a solvency crisis coming.
Yeah, we actually are putting a lot of pressure on banks to move into that direction. But to be honest, that's an area where I see a silver lining in this crisis. Banks have realized when they move to remote provision of services during the crisis that they can really gain a lot in terms of efficiency, profitability, by revising the way in which they provide services, by investing more in new technologies, in digitalization, by revising the number of branches downwards, by cutting staff sometimes, and by refocusing their business model. So we see progress there, and consolidation also is taking up. We've seen some operations. So we see that something is moving in that space, and we are happy about that.
Okay.